Hello guys, in this video I'm going to show you a perfect supply and demand strategy that works on both forex, crypto, synthetic, commodity, stock and so on. So guys, before we move further, make sure you hit the like and hit the subscribe button so that you won't miss my next video coming out soon. So I will be dropping some few videos in a few days time, so stay tuned. So before we move, this strategy I'm about to show you guys, it literally works on every time frame, but today I'll be showing you guys on a lower time frame. So where we are now, we are on the Euro USD chart. Okay, so, but first of all, let's go to synthetic. So let's go to synthetic because it literally works on every pair, like I said. So let's go to the higher time frame buyer, so we know our direction and where the market is heading to, so we won't be on the wrong side of the market when taking our trades. Okay, as you can see, the market was trending to the upside few days or few weeks back. So the market was trending to the upside. It started from this point, holds back, stay bearish, take out this high, bullish, pulls back, create another high, take out this resistance level here, pulls back, broke past all these highs, pulls back, take this high, and the market push to the downside to sweep the available liquidity around this area, then even go more further by creating another new high, making it an all-time high. Then from there you can see there's a change of character here and another change of character here, which with the market pulls back again, then boom, a massive bearish market. So our point of interest should be around the start of this massive sell. We call them from the sell started 8th of August to 14th of August. So at least the people who called this trade might have made tons of money. So, or let me say thousands of dollars. So on. But in this video, I'm just trying to show you how perfectly this demand and supply strategy works on every pair. So as you can see, the market broke past this low. Let me identify it as chalk, change of character. So market, but before then, you can see there's some available liquidity around this area here. So let me map out this liquidity pool. If you watched my last video where I talked about liquidity, I bet you understand what I'm trying to say here. So that you can see the liquidity pool around this area. So like I said, in this video I'll be showing you guys on the lower time frame. It works on every time frame, but in this particular video I'll be showing you guys on the lower time frame. So let's jump to the lower time frame. We already know our bias is bearish. So why the bias is bearish is because the market hit a new all-time high. This was the previous all-time high, then this is the current all-time high. So after every all-time high, the market is likely to sell massively to grab some liquidity before either moving to create new all-time high or finally start going down even more. But first, let me show you what I want to show you guys. So we have mapped out our liquidity pool so we won't get trapped in. because like I said in the previous video, liquidity is all about stop loss hunt, a fake move to trick retail traders to get into the market before the real move. So you can see this area is a liquidity pool. Yeah, it's more clearer like this. So this is a 15-minute chart. So you can see the lows. All these ones are all substructure. If you go to the higher time frame, they are not visible on the higher time frame. You can see lower low, lower high, lower low. You sweep of this high, you move to the downside, lower high, lower low, lower high, lower low. Then the market started pulling back, create a new high, new low. You can see the available liquidity around this area, and this area. So the market will only move after it grabs a lot of liquidity. So as you can see, the market have already swept all the liquidity around this area, swept all the liquidity, move to the upside, then broke past this low. So that's where we'll step in. So our POI now, our point of interest around this area. So as you can see the market, but if I'm to trade this market, I will have to wait patiently for this low to be taken. You know why? Because this low appears to be a protected low. As you can see, the trade was going higher high, higher low, higher highs, then a sweep to this low. As you can see, the market swept this low. After sweeping this low, the market started creating new highs, new low, then boom, swept every liquidity. So this high is likely to be protected, but since the market order flow is bearish, so we won't be looking for a buy here instead. I understand the market swept this liquidity here, makes this low a protected low, and create available liquidity here, which I won't even think of trading because the market order flow is bearish. So I will be looking for a sell instead of a buy. So I would have to wait until this low is taken, this current low here, this protected low here is taken. So as you can see, the market moves to this low, respected this protected low, swept the liquidity here, boom, creates new high, just to sweep this available liquidity here. So after sweeping this available liquidity here, the market then pulls back. You can see the imbalance here, the fair value gap, the long bearish candle, but as you can see, there's no supply or demand there, so I won't be taking any trade there. If I should take the trade around this area, this first area here, I would have been in a massive profit, but instead I'm not interested in that area. If I should take from this fair value gap here, I would have been in a massive profit by the time the market comes to this area, but I wasn't interested either until boom, I saw this sweet supply candle stick, very unmitigated. As you can see, it is very unmitigated. It looks clean, create an imbalance with a massive move to the downside that swept this low which makes it a valid supply. So map my supply, then boom, the market comes, started pulling up, then boom, we tapped in. As you can see, the market started reacted to the area, then boom, you can see the massive bearish candlestick. So that should be my point of interest. So I will take my trade from here. Take my trade from this area. Put my stop loss a little above the supply candle so that it will have enough space to breathe. So what I will be doing is go to the higher time frame, look for any lows there, the nearest low. That's what I always target. That's what I always go for. So as you can see, this is the available liquidity. And then boom, the market, we smashed our take profit here with 1 risk to, let's see the risk to reward, 1:6. So if you are risking like $5,000 on this trade now, we'll be getting like $30,000 by the end of this trade. It's not even more. I didn't want to stretch my take profit. I just want to work with the nearest available liquidity I'm seeing, which is this area here. So, and which gives me a massive win, a 1:6. That's pretty cool. So if we have to look for another entry on this same trade, because the trade is going to sell for a while due to the all-time high stuff, so let's look for another entry. I told you the strategy works on all pair and it works all the time. It will definitely increase your win rate. So as you can see, the market keeps selling, declining, lower lows, lower highs, lower lows, lower lows, lower high, available liquidity. You can see the M pattern. So this place is called, it's another liquidity pool area. So I won't be looking for a sale around this area. Instead, I will wait for the market to take out this area to sweep all this liquidity, which happens definitely. As you can see, the market tap to this area, come to the downside, and boom, the market sweep all its available liquidity, including this one. Then finally react to this area. As you can see, the massive supply candlestick. But I won't, because why I didn't pay attention to this area is that you can see the available liquidity here too. So I won't be paying attention to this area either. So but as long as the market has swept this available liquidity, swept this liquidity here, swept this liquidity here. So what I'll be waiting for is the market to push to the downside and move to the downside. So I will make sure this liquidity sweep delivered his unit by selling to the downside and taking out this low, which would make it a valid area of interest. So as you can see, the market moved to the downside to create a new low, which still makes us bearish, keeps us on the track, keeps us on the right side of the market. So what I'll be looking for now is a valid supply candlestick. As you can see, there's one here and there's another one here. So what I'll be looking for is wait to see where is the market going to react. Where is the market? Because that area too is a valid point of interest because it's above the discount, it's above the premium level, which is also above the discount level too. So it's a good area of interest for those who use Fibonacci retracement they know what I'm talking about. So as you can see, the market create this supply, create another low, which I will take out this low here to create another low. Then the market started pulling back to sweep this available liquidity here, and then go up even further to react to this level here. Why I won't be paying attention to all this supply here is that they are beneath the premium level, so I won't be paying attention there. Instead, I'll be focusing on this area here that is around the premium level, this and this. So which the market comes to this area, as you can see, the market reacted to this area, create some multiple rejection or more, as you can see. So that's where I'll be paying attention, and that will be my point of interest. So what I will do now is to place my order around here after the rejection. Boom, another entry again. Or if I want to hold the trade for long, I might take profit to the upside, because this high is very protected. It's very, very protected. So put my entry there, my stop loss there. Already, we are already in massive profit from this first trade here. This trade gives us a massive profit, so I wouldn't mind to risk that much on this area. I just want my stop loss to be safe. So in case the market wants to manipulate us to do something like this, and tap this zone, sell even more. So I just want my stop loss to be safe. I just want to have a safe trade. So as you can see, what happened? Boom! We now have a long, juicy, bearish engulfing candlestick. So what I will do is, after seeing this long bearish engulfing candlestick, I might even reduce my stop loss. So I will just bring it to the downside above this area, give it a little space to breathe. And then, like I always said, I like working with the nearest available liquidity. Now we have broke past this level. So where is the available liquidity? So it's safe to say, let me work with this area. Yeah, perfect. So as you can see, what happened? Bam! We hit our take profit with a massive bearish candlestick. So I think if I'm to be trading, if I have these two, if I'm to be trading this pair, if I have these two moves here to the downside, I think I'm okay for the week. Here gives us $30,000. Here gives us, here I'll be cutting I'll be risking a very little because the trade is kind of tricky. So my first stop loss should be around here. We'll be risking the same $5,000. So when the market push to the downside, so I would have to trade my stop loss to this side to be risking $2,500. But the profit, the target is still the same thing. So from this area, you have to be risking $5,000. Our profit should be around $15,000. So the same thing, when we trade our stop loss to $2,500, we'll still be targeting the $15,000. And what happened? Boom! The market smashed our take profit. So if you go to the higher time frame now, you see that the market keeps pushing down or to this area, but I shouldn't be stretching my TP to the downside. I will just work with available liquidity around this area, this demand zone here. Yeah, I will just put my TP around this demand. So in case the demand zone wants to push the market to the upside and I don't want to be gambling with my trade, I just want to take that perfect trade. So guys, I believe by now you should have understand what I'm trying to talk about in this video and what I'm showing you in this video. You can backtest this whenever you want, but I'm sure you by the end of your backtesting, your win rate will surely improve by 40%. Seeing you guys on the next